These 4 stocks are in my potential buy list for this upcoming week. Like always, my name is Jose Najarro, and this is the weekly series where I take a look at 4 stocks that I believe are sitting at attractive levels right now. Out of these 4, I am going to purchase either one or all 4, depending on how they react within the upcoming days. The first company I am going to take a look at is a super small company. This is One Stop System. Not many people have heard of it, but since I first mentioned it in this channel, I believe the stock price is already up over 100%. At its peak, I do believe it was up over 200%. So One Stop System is a microcap company. I am super bullish in the semiconductor industry and companies behind that industry. One Stop System definitely falls there. They create things like GPU accelerators, products that go into data center servers, and things that go into the cloud edge. If we take a quick look at their presentation, we can really see the fields that they hit. So this is pretty much the performance of the data center at the very edge. There are certain applications when artificial intelligence can't wait for the cloud processing to happen. For example, planes, the oil industry, the defense industry, autonomous vehicles, and so much more. So here we can see a lot of the technology we use, from radars to self-defense systems to autonomous driving, smart cities, airplanes. They need to process data on real time. And even though processing things through the cloud is super fast, it's not fast enough. Here is a perfect example. In the airplane, you need real-time data collection and analysis, right? So you can't wait for that data to go through the cloud. And here they have data center in the sky. This is pretty much what One Stop System does. Here you can see some of the products they make, from GPU accelerators, flash array storage, servers, and here you can see they have some amazing customers, mainly in the overall aero defense world, where I do believe that is a very niche market and a very hard market to get into. So by having those type of customers, it already kind of accelerates the growth that this company can see. This was a company that was definitely affected by COVID, but they believe growth is back to normal. Q2 guidance, they expect 24% year-over-year growth, and they expect 8% quarter-over-quarter growth. One Stop Systems currently traded under the Nasdaq as ticker OSS and is currently sitting at $5.78. This is probably one of the smallest companies I own. It currently has a market cap of $106 million. So remember, since this is such a small company, this is one that's going to be very, very volatile. Right now, from its 52-week high, the stock price has seen about 35.5% correction. And before we take a quick look at their fundamentals and future growth, make sure to hit the thumbs up and the subscribe button. It helps out so much with the overall channel. And let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much free content to you guys. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So One Stop System is expected to grow 13.2% on average for the next 3 to 5 years. So this is a nice growth stock. Right now, the company, if taking a look at trailing 12 months, they are profitable in earnings and they are positive in cash flow from operations. Taking a look at their balance sheet, they have about $20 million in cash and about $5.2 million in debt. Remember, this is a company with $100 million market cap, so they do have a good amount of cash position. So I'm really liking their overall balance sheet, and this is a company I wouldn't mind holding during high interest rates because of their strong balance sheet, because of their passive and cash flow from operations, because of their positive earnings. The second company we are going to take a look at is a fintech industry. This is StoneCo. This is a Brazilian fintech company. They offer numerous solutions. The main solution is their point of sale solutions. They also have solutions to kind of digitalize your store or products with companies like Pagamer and MultiPag. They also have smart financial management like Equals, and finally they have TEF solutions like Capta. StoneCo is a company that is being backed up by Berkshire Hathaway. Right now, the company is traded under the Nasdaq as ticker STNE. It's currently sitting at $66.31. In the past few days, the stock price has gone up, but we can see from its 52-week high, the stock has seen quite a correction. It's down about 29.52%, and it currently has a market cap of $20.56 billion. Some recent news about Stone: on May 20th, they did announce a repurchase program of about 200 million. And recently on June 17th, the Brazilian Antitrust Authority unanimously approved the business combination between Stone and Linux. Not Linux, the operating system. This is Linux, a leading provider of retail management software in Brazil. This was a smart acquisition based on the products that they provide. We can see they're trying to overall increase their fintech products around Brazil, and now it has been approved. Right now, this is one expected to grow 23.0% on average for the next 3 to 5 years. The company is profitable in GAAP earnings, and if we take a look at their balance sheet, it's also looking pretty impressive. Right now, they have about $11.2 billion in cash and short-term investments and about $6 billion in debt. Again, strong balance sheet, strong revenue growth in a strong market. These are the type of companies I want to own. The third company we are going to take a look at is one that's been very popular this week. I've actually done a video on them, and it's Draftkings, the online betting platform, or the sportsbook platform, right? So right now, Draftkings is traded under the Nasdaq as ticker DKNG. Right now, sitting at $49.20, and right now, from its 52-week high closing, the stock price has seen a correction of about 31.4%. The most recent news is there was a short report on Draftkings that has really pulled down the stock price. Draftkings is expected to grow 28.6% on average for the next 3 to 5 years, so a nice growth stock. Unfortunately, the company is not profitable or positive in cash flow from operations, so you want to make sure they have a very, very strong balance sheet, and they do, right? They have about $2.8 billion in cash and $1.2 billion in debt, so they're net cash positive. That's great to see. Again, the company and fundamentals I wouldn't mind holding. One of my favorite things about Draftkings right now is just the overall innovation that they're working with. In their most recent earnings, they kind of mentioned a collaboration with Sling TV to launch betting information channels. They have it for basketball. Soon they will be having it for baseball and hockey. They're also innovating in the igaming. This is the online casino world. There is a DraftKings built casino game that launched on April, and right now I'm getting plenty of ads for their casino game, so we can see DraftKings is definitely entering this market and is being very, very bullish. And next is the overall updates in their applications. They are releasing social functionalities there, for example, commenting, friends, notification, bet sharings, and even having a profile. So it's kind of like going to the casino without having to see people real life, but still able to communicate with them. DraftKings is definitely looking pretty impressive, and later on we're going to take a quick look at their technicals. The final company we're going to take a look at is Skillz, and Skillz is one I want to say a lot of people kind of have some hate for it. This is one I'm going to consider a little bit more of a speculative play, something I don't mind having in my portfolio, but wouldn't be a big position. For those that don't know, Skillz is the online competitive platform. You can kind of have online tournaments in there and win money behind it. Skillz right now is traded under the New York Stock Exchange as ticker SKLZ. It's currently sitting at $18.99. From its 52-week high, the stock is down about 56.56%. That's actually pretty impressive. This is just the lottery number, right? We have to definitely win. Market cap right now is $7.53 billion. One thing I do want to say, right, Skillz does not have strong games right now, in my personal opinion. I am an avid gamer to some extent, and I have to say, right, the games right now on Skillz platform are not the best. That is not the reason I am investing in Skillz. I believe Skillz has the potential to grab new games in the future, and if they grab some of these crazy multiplayer games out there, some of these first-person shooters, some of these racing games, then it's gonna transform the overall company and really make a name for itself. So I'm investing more on the future than opposed to where the company is at right now. In recent news, on June 2nd, they have acquired Arky, which is an esports advertisement platform. So now Skillz is not only focusing on the paid users, they're also gonna be focusing on the free users that kind of just play their games by being able to do smart advertisement to them and collect some form of advertisement revenue. So I do believe that is a great move for Skillz. Some other recent news: Playboy announces Summer of Play, which is going to be weekly mobile gaming tournaments run on leading mobile games platform Skillz. I wouldn't say this is dramatic change for the company, but again, it's just bringing eyes to the platform. Skillz right now is expected to grow its revenue 25.8% on average. So this is a nice hyper-growth stock. Unfortunately, the company is not profitable or positive in earnings. For the reason, Skillz is more like a tier 3 stock, a speculative play, one I don't having a small position, and I do believe even a small position can make up some crazy gains if the business is done correctly. Again, this is one I would definitely want a strong balance sheet, and they do. They have $612 million in cash as their most recent earnings and no debt to their name. Now what I want to do is take a quick look at their technicals, make sure these stocks aren't overextended. We start off with one stop system. We can definitely see it's not overextended from its short-term moving average, maybe a bit overextended from its medium-term average. So overall, looking good. If we take a look at Stone, pretty similar, nowhere near overextended from a short-term or moving average, so the stock price is looking good at these moments. Draftkings definitely not overextended from a short-term or medium-term moving average, and Skillz very similar, not overextended from a short-term and moving average. I do believe the stock price can continue to be volatile and they can drop down, but I do believe a good portion of the risk has been eliminated. Now, if I can share my overall thoughts, I do enjoy all 4 of them, and out of these 4, I'm probably gonna purchase either 2 or 3. So I hope you guys enjoyed today's episode. Take care, see you next time, and enjoy.